Most traders lose money because they don't understand market structure. In this video, I'll explain it in the simplest way using this chart. First, remember 4 words: higher high, higher low, lower high. When price makes a higher high and then a higher low, the market is in an uptrend. This means buyers are strong. Higher high plus higher low equals uptrend. In an uptrend, smart traders don't buy at the top. They wait for price to come down to the higher low or support area and then look for buys. Now let's see the opposite. When price makes a lower low and then a lower high, the market is in a downtrend. This means sellers are strong. Lower low plus lower high equals downtrend. In a downtrend, smart traders sell near the lower high or resistance area, not at the bottom. Now look at the green zones on the chart. These are called support and resistance. Support is where price stops falling and moves up. Resistance is where price stops rising and moves down. Very important rule. Old resistance becomes new support. Old support becomes new resistance. Finally, swing high is where price turns down, and swing low is where price turns up. These swings help us understand trend and find strong levels. No indicators needed. Price itself tells everything. If you understand market structure, trading becomes simple.